Everybody, and welcome to my Intermediate Accounting 17th edition video solution walkthrough. This is for problem 16.7. This is from the Intermediate Accounting 17th edition textbook. Authors are Don Kiso, Jerry Weingan, and Terry Warfield. The question used in the presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, let's take a look at problem 16-7. So Charles Austin of the Controller's Office of Thomson Corporation was given the assignment of determining basic and diluted earnings per share for the year ended December 31st, 2021. Austin has compiled the information listed below. The company is authorized to issue 8 million shares of $10 par value common stock. At December 31st, 2 million shares have been issued and were outstanding. The per share market prices on selected dates, it's really going to be irrelevant to this question, but they just kind of like to throw it in there anyways. Over here, a total of 700,000 shares of authorized 1.2 million shares of convertible preferred have been issued on July 1st. The stock was issued at a par value of 25 and has a cumulative dividend of 3. And by the way, that's an annual dividend. And so each of they're paid quarterly, it's going to be 75 cents per quarter. Thomson Corporation is subject to a 20% income tax rate. The after-tax net income for the year ended December 31st, 2021 was 11.5 million. The following specific activities took place during 2021. Okay, so on January 5th, a 5% common stock dividend was issued. The dividend had been declared on December 1st to all stockholders of record on December 29th, 2020. So what's going to happen here is that we had, in terms of common shares, we'll say this is on 1/1/21. We had 2 million common shares. And once the 2 million common shares over here were issued, so we've got those 2 million common shares from the prior year with the stock dividend. We're going to multiply this by 1.05, and this is going to give us 2.1 million shares, right? So this is our new common shares outstanding as of the beginning of the year. Remember that when we're dealing with splits or dividends, that's going to retroactively adjust everything prior to the date of the dividend. Okay, so here's where the fun begins. A total of 400,000 shares of the $3 convertible preferred stock was converted into common. The company issued new common and retired the preferred stock. It was the only conversion of the preferred stock during 2021. So before we go any further, this new common share outstanding, this is also going to be outstanding for the full and entire year. So when we're getting to our first question, which is determine the number of shares to use for basic earnings per share, just remind yourselves that stock that's outstanding as of the beginning of the year is going to be different than that which is issued in the interim period. So for number 3, right down over here. So on April 1st, there were 400,000 shares of the preferred stock converted. However, for that converted preferred stock, we have to adjust it for the stock dividend of 1.05. So the actual number of shares that are going to be issued as a result of this are going to be 420,000. So on 4/1/21, preferred converted, this is going to be 420,000. The other thing to think about is that when we go to do the weighted average shares outstanding, this is only going to be outstanding for 9/12. Why are we saying that this is 12/12 and this is going to be 9/12? Well, the 12/12 is from 1/1/21 through 12/31/21. The preferred converted, this is going to be 4/1/21 through 12/31/21, or 9 months. So we'll just kind of keep that in the back of our mind. Okay, so that is number 1. This is number 2. Number 3, a 2-for-1 split of the common became effective on this date. The board authorized the split on June 1st. Whenever we have a split or a dividend, we're just going to go ahead and adjust everything. So this is a 2-for-1. I'm taking away the old share, 1 old share, as I'm giving them 2 new shares. So this is going to be 4.2 million shares, and then this is going to be 840,000 shares. So that's how those shares are converted. Don't need to worry about, do we have to go through and say, oh, this was on 8 now? It basically applies retroactively. Okay, so this is split adjusted. Okay, and this was on 2-for-1 split, was on 7/1. Okay, so here's kind of fun where I kind of lost. Okay, there we go. Okay, August 1st, a total of 300,000 shares of common stock were issued to acquire a factory building. So over here, stock issued, and this was on August 1st. This is going to be 300,000 shares. Now note, I don't have to adjust this for the split because it's already been adjusted for me. So those new shares that are coming out were split adjusted. But the one thing I'm going to have to keep in mind is this is going to be outstanding for 5/12. Why is it 5/12? It is from 8/1/21 through 12/31/21. Let's take a look at the 5th one. I bought back over here. I repurchased, let's see, 24,000 shares of common stock were purchased on the open market at $9 per share. They were held as Treasury stock, and we're still in the Treasury as of December 31st. So over here in 11/1, Treasury stock. And this is going to be 24,000 shares. We're going to show that as a negative amount. And also, too, we're going to have to remember that this is going to be outstanding for 2/12. Or over here from 11/1/21 through 12/31/21. Okay. Lastly, we got common stock cash dividends. That's not going to impact the number of shares used to compute basic earnings per share. Preferred stock cash dividends, don't have to worry about that as of right now. So the first question is, what are the number of shares used to compute basic earnings per share for the year ended December 31st, 2021? So for this, what we're going to do is we're going to multiply our shares by the length of time they were outstanding. So here, this is going to be 4.2 million. The shares were outstanding the entire 12 months. So it's going to be 4.2 million times 12/12 of 1. The 420,000 shares that were converted from the preferred are also going to be adjusted for the split. So for this one over here, what this is going to be is this is going to be 840,000 shares split adjusted times 9/12 or 630,000. For the stock that I issued for the acquisition, this is post-split. So I'm just going to take the 300,000, multiply it by 5/12. And then for the Treasury stock, this is going to be 24,000 times 2/12. Okay. So over here, when I go through, and I'm going to go ahead and add up my numbers. So the total shares for basic earnings per share is going to be 4,951,000. So that is my total shares for basic earnings per share. Okay. Now, when we get to fully diluted earnings per share, which is the next one that's being asked of us. So compute the number of shares used to compute diluted earnings per share for the year ended December 31st, 2021. So we have to ask ourselves, are there any other besides the preferred stock? Are there any other common stock equivalents that are outstanding? And the answer to that, there's no stock options. I don't really see anything that's out there. I think all we really have is the convertible preferred. So when we go through and we look at this, we're going to go ahead and say, all right, if we had for the convertible preferred, okay, let's take a look at it like this. So I had a total of 700,000 shares that were going to be issued as a result if the preferred stock was converted. 400,000 of these were converted. 300,000 of these were not. So this is unconverted preferred stock. So for this unconverted preferred stock, if this was to be converted, what would it look like? Well, the first thing that would happen is I would have to adjust it for all splits and dividends. So this 300,000 would now become 315,000. And at the same time, I'd also have to adjust it for the 2-for-1 split. And if we assume as long as these preferred shares are not anti-dilutive, what this would then be, and I don't think we're in that situation, we would then have 630,000 shares that could have been issued had that preferred stock been converted. So this is going to be outstanding for the full 12/12. Okay, so right over here, plus unconverted preferred stock. This is going to be a total of 630,000 shares. Now, for the other part of this is we have our converted preferred stock from 1/1 to 3/31, or the 3 months that it was outstanding, but yet unconverted. So over here, we're going to have 420,000 times 2 is going to give us 840. So it's really the same one, but in this case right over here, I'm now multiplying this by 3/12, or from 1/1 to 3/31. And so this is going to add in here a total of 210,000 shares. So I'm going to go ahead and put in 210,000. So over here, so my total shares for diluted earnings per share, it's going to be 4,951,000 plus 630 plus 210, or 5,791,000 shares. So for the next part of what I'm going to try to go through and do is that it's asking me to compute the adjusted net income to be used in the numerator for basic earnings per share for the year ended December 31st, 2021. Well, if we remember what that looks like, our numerator is going to be our net income minus preferred dividends divided by my weighted average shares outstanding. Okay, so we know that our net income, it tells us over here in the question that our net income was 11,550,000. So this is my total net income. However, I now need to figure out what my preferred shares, what the dividends were. So for this one here, we're going to kind of ignore the splits because everything would be subsequently adjusted. So don't worry about it. Just look at it in terms of the split. So right over here, the 700,000 shares. So on the first date of the dividend on March 31st, because remember the preferred dividends were not converted until April 1st. So they were all still outstanding. So over here for my preferred dividends, so I have 700,000 shares outstanding. preferred shares outstanding. My dividend rate, because it's paying quarterly dividends, my annual dividend is going to be $3. So on a quarterly basis, it's going to be 75 cents per share. So there were 700,000 shares of preferred stock outstanding on this day at 75 cents per share. So my preferred dividend that I paid on that date was 525,000. So my next one, which is going to be 6/30, then I think it's September 30th and December 31st. Well, over here on these dates, when I go through and I take a look at this, I converted 400,000 shares. So my preferred shares outstanding on these dates is just going to be 300,000. And it's going to be at that same dividend rate of 75 cents per. So I've got 1.2 million. So this is going to be 11,550,000 minus 1.2 million. So my numerator is going to be right over here of 10,350,000. So that's how we go through and solve problem 16.7. I want to thank you for joining me here today. I want to thank Wiley. Please don't forget to like and subscribe. If you'd like to see other solutions, please feel free to ask for them in the comments. Have a great rest of your day, and I look forward to seeing you on the next video. Have a great day.